to the Ichimoku charts.com daily analysis for gold for Thursday, September 6th, 2012. Well, a continuation of the trend to the upside today in the candle that has made a higher high and a higher low. Previous day's trading, we had a potential Japanese candlestick reversal pattern, a harami pattern. We didn't have confirmation of that pattern. With all of the Japanese candlestick reversal patterns, we require confirmation. Confirmation in that case would have been a candle with a lower high and a lower low, and the market didn't trade anywhere near the low, and the trend has continued up on its way. Yesterday we had seen the market already test up to the 1700 level where we had potential very strong resistance, and we then have seen the market continue trading up through to a great extent through that area, testing up to the roughly about the 1717 area. I highlighted this yellow area yesterday as an important area of resistance for this market. We had a very large zone of resistance previously within this area, and for today's trading, even though the bulls attempted to take control of this market, we saw a very strong price rejection from that area, and I think it highlights how important these zones, even if they are a fair way in the past, how important they can be. We have a white-bodied candle, so the buyers have made some decent net bullish progress, but they've closed just below the midpoint level, which suggests that neither side has really taken control of this market. The buyers certainly have lost control, and that may be significant and may lead to a change of trend. This test up above 1700 is significant. We've only had just a moderate close up above there, and that round number is very, very strong resistance for this market. So we are now, for today's trading, as it's progressing, seeing some rejection from that area and the market trading below 1700. So that could be significant. So a market where the buyers really had the opportunity to follow through, but they've failed here and haven't taken control of this market. They've lost quite some commitment throughout the trading day. Now, in terms of the Fibonacci extension, and we're examining the current first-time relationship that the market's in, or the first-time frame uptrend that the market's in relationship to the previous time the market was trending up, and we've seen strong rejection from the 78.6% level at 1715, coinciding roughly with the high of this current candle, so that could be quite significant. It's a minor level, but with such strong price rejection from there, this market is set up for a change of trend back to the downside. In terms of the Fibonacci retracement of the prior downtrend, we have the expansion through the 100% level. The market yesterday traded up through the 161.8% level. Prior to that, we had the market testing to that level, set the market up for that change of trend, but we have closed up above that 161.8% level, not in a bullish way, so that could be significant. But if we do continue trading to the upside at the moment in this first time frame uptrend, we have a target at 261.8% at the 1731 level, but it certainly doesn't seem that the market will be trading up to there. In terms of Ichimoku, a bullish market in all three timeframes, as we've seen with the equities markets and some of the currency markets. The market's trading above the cloud, above the Kijun-sen and the Tenkan-sen, so we're bullish in the long-term, medium-term and fast-term timeframes. We have the Chikou span above the corresponding price action, so it's confirming the bullishness that we're seeing. And we are looking at a market that is looking a little bit overextended. We are trading a fair way away from the cloud, and markets tend to act like rubber bands, especially with the Ichimoku indicators. They tend to stretch away from there and then retrace back towards them, and that certainly is a very strong possibility considering the very strong resistance overhead and the strong rejection that we've had today. There is a possibility we could see the market test back to lower levels. We do need to keep an eye on the low of the current candle for a potential lower high and lower low. We haven't seen the sellers take control of this market yet throughout the previous 3 or 4 trading days, so that's important, and we would need confirmation of a change of trend. If we do see that change of trend, we would expect to find support at the Tenkan-sen, which has been pointing up quite sharply and very often where we have solid upside momentum in the short-term time frame. That is the first level that the market finds support, and that's at 1682, and it coincides roughly with this swing high at 1679, so that's quite significant. Strong support down below there at 1667, and then at the kitchen sand at 1652. But overall, a very, very bullish market. The market has made quite an extensive move, tested above the strong 1700 area. We are now seeing it trading below there. Very strong resistance overhead. Some solid areas of support down below, especially around the Tenkan-sen at roughly 1682.